Welcome back to Trading 360. I'm Nicole Petalides. It's time for the big three stocks, three charts, three trades. Rick Ducat will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder of Theo Trade. Glad to see you both. Don, what do you think of this market? I mean, yesterday was lower lows than Monday. What do you see, or are you planning on any moves one way or the other?
Yeah, you know I love the volatility. I mean, this is where I live. This is what I grew up in terms of a trader. So definitely love a lot of the volatility, the back and forth. Obviously, I'm an options geek. Selling some of the implied volatility right now looks decent. I mean, look, overall in terms of moves here, one of the things that I really need to express, we're not seeing high enough degrees of correlation, and that is if you look at like the S&P 500 and some of these really big down days. There's still, pockets of strength going on. We need to see people just literally throwing in the towel before some of the sell side activity is over. We're a little closer this morning, but we're not home just yet.
So you don't think yesterday was the capitulation or the bottom just yet? Is that right?
No, absolutely not. Again, without correlation, we have no capitulation.
Don, all right, let's kick it off. Let's talk about Tesla, which is actually up 5.5% today. It says it's the company going to double U.S. production. We've seen some fun videos of Elon Musk and the President of the United States with his new Tesla. Some of your thoughts on a name that was beaten down 50% from its highs. It's clawing back now.
So Tesla, this first trade, I'm actually going to be bullish. And this one I'm bullish on, largely predicated on, look, it had almost a 15% down move, 2 days ago. But one of the things that really struck me was immense amounts of volume. So the activity inside of the last 2 days of trade in Tesla was of the degree of capitulation, in addition to and I'm just talking pure stock volume here. Like if you look at a daily chart, you're going to see immense amounts of volume. Like everybody was throwing the towel in on Tesla. In conjunction with that, I actually saw the IV rank. That's an implied volatility rank, the highest it had been literally in the last 52 weeks. So in the last year, it's the highest implied volatility. Again, both of those are pretty good signs of capitulation. So I'm actually going to trade this effectively for a bounce. Inside of Tesla, I'm just going to go out to the April 4th expiration. Now, I recognize that Tesla is already bid higher today. Nevertheless, I'm going out to the April 4th expiration. I'm going to be buying a 270 call, selling a 275 call. I'm going to use a spread, $5 wide spread, to keep myself intact and away from what we term the volatility crush. Stocks like this that are just all over the place, when they bounce back, the volatility crushes. So I got to use a spread to protect myself there, not just buy a call. This $5 wide spread is done for a $1.35 debit.
Okay, let's see what Rick says about the chart. He's noting the heavy volume, which I'm sure you'll see there on the chart too. Let's see it.
To kind of piggyback off Don's point, in a different way, too, I look at the option time and sales data in Thinkorswim very often for a variety of stocks. And typically Tesla is one of the highest numbers. Usually it's like, just kind of anecdotally, 330,000 individual option trades per day, one of the highest in the market for sure. So quite a lot of heavy activity, no matter any way you slice it here. But to look at the chart, we can see that there are about, two phases, I would say, in this chart recently here. We had our sideways phase, and then we had our rally phase, and then the eventual give back that took us back to where we began this kind of sideways consolidation range between about 208 and 265 here. You can see that matches up with lows here, and then high points here, and here. So unfortunately for the bulls, that old ceiling did not really provide much of a landing pad here for price as we fell down below the lower edge of our downward sloping channel type shape here. We can see that we have tried to retest it so far today, that old boundary. So far we haven't made it back within those confines here. Heavy volume spikes, volume at least 50% above the 50-day simple moving average of volume. So heavy volume on one of the heaviest volume traded stocks to begin with. RSI perhaps about to break above not only that 30 oversold line, but also our downward sloping red trend line. So if we do recapture our pattern and RSI gets a corresponding breakout, that could add some extra credence to the upside move here. But if we were to move lower, volume profile point of control down here, 177 or so seems like a noteworthy area. We are within another volume node here near about 250, Nicole.
Okay, thank you for that. And it's interesting because, right, you don't normally talk about being bullish or seeing momentum to the upside, Don, but it looks like you're making an exception today based on these charts.
Yeah, there's going to be a lot of bullishness lately because look, this volatility brings opportunities on both sides of the marketplace, and that's what you got to look for as a trader. You got to look for two-sided trade. What we've been in, if the last couple of years are any indication, is a lot of one-sided trade. We just kind of grind a little bit higher, and I know that investors love that. But this kind of volatility, as I said, this is where I live. This two-sided trade over here, some of the bounces, and again, I would perceive a bounce could come at any moment, not just in Tesla, but the entire S&Ps. Nevertheless, as I said earlier, I still don't think we've seen the bottom per se, though, of the overall marketplace.
Let's get to EWG in Germany. The year-to-date performance for this German ETF is up almost 20%, certainly bucking the trend that we've seen here at home. Tell me a little bit about where you think this could be headed.
Well, here's where the bear comes back in. So you have German markets effectively sitting at or near all-time highs. Yeah, they backed off a little bit in the last couple of days, but here's one where I'm not buying it. Literally, figuratively, I'm actually getting short. I'm a big-time bear in the European markets, and EWG specifically is where I want to get that done. Now, I could go into reason after reason, but you only need look at the political environment or the regulatory environment to say, like, look, who wants to invest? Now, I'm hearing constantly right now, on broadcast that, well, we're shifting right now over to overseas markets, a lot into Europe. You really want to invest in there? I mean, it's like bringing a wet blanket to a party at this point, anywhere in Europe in terms of the regulatory environment. I just don't see heavy investment inside of European markets. As such, in the EWG, look, I'm actually taking a statement over here. I'm going to go all the way out to the July 18th expiration. And I'm going to be buying a put in the money, and I'm doing it because I'm creating what we term a synthetic short. I'm buying the 42 put, just buying the put outright, okay? And I'm doing that for a $5.05 debit, looking for a dramatic, not just a short-term move, but a more dramatic move to the downside inside of the German markets.
Okay, thank you for that. So turning bearish on this one, let's see what Rick Ducat says. Check out the technicals.
Yes, that break even around 37 or so, a similar area to what I had my own eye on here. As we look at our chart, we can see that was our high point before we had our gap up, and it's been our subsequent low point during these past few sessions here. So 3750 was just kind of the general area that I was like focused on. Probably, 37 would make sense just to, call it an even whole number there. But the reason that we are taking notice of that is not only because of that gap level, but also because we had this upward sloping channel here that began with this low point. Our two white dashed trend lines are parallel to each other. Took a conventional trend line going across the lows, duplicated it, put it across the highs, matched up pretty well, provides us with a potential boundary to keep an eye on going forward if we do resume our upward climb. Now we can also see, once again, very heavy volume recently, many volume spikes here as we have broken above our previous highs. But notice as well at the same time RSI actually fading a bit. We're seeing bearish divergence here. The pace of the gains is slowing down. Does this mean there's an impending collapse coming? Not necessarily. That's not what I'm trying to say. This is just showing that the acceleration of the trend is starting to slow down. The pace of the gains is not really matching the level at which it once was. So a sign of potential slowdown or consolidation. So we had those shaded areas on our chart. The reason we did is because they match up with these volume nodes here. Relatively light volume at these elevated levels compared to all the way down here at our point of control. But some areas to watch based on that would be more like 38.50 and around 36 or so, Nicole.
All right. Thank you so much for that. And finally here, last but not least, Don, we'll take a look at Walmart. Your thoughts there?
Yeah, so Walmart, I'm not necessarily outright bullish here, but I am looking for a significant bounce back to the upside. So, Walmart, if you look at this underlying chart, which Rick is going to look at momentarily, you would think, like, if you just covered up the symbol here, you would think this is like NVIDIA. It's not. It's Walmart, people. So welcome to Walmart, which has become quite a volatile animal in the most recent years. Nevertheless, I'm actually going to look at this for what's called a call ratio backspread. It's a little bit of an up-tempo strategy, but it works extraordinarily well in these kind of what we term as traders wicked rip your face off rallies. And that's exactly what I would expect inside of Walmart. So I'm only going out to the April 4th expiration. And the trade is to sell one of the 88 calls. So selling one of the 88 calls to turn around and finance buying two of the 91 calls. This trade is done what we term at even, meaning that it's neither a credit nor a debit. It's even money. The trade doesn't lose anything if the marketplace goes down. The trade actually can make some decent money if we actually get back up to that 94, 95 region, and it's 95 specifically that I have in mind in this particular price chart.
Okay. Let's take a look because let's see about the rip your face off rally. But the truth is, there are people who still come on. They all love Walmart. I had one guest who said the outlook and it being somewhat tepid sort of crushed the market, that Walmart single-handedly was somewhat responsible for the market sell-off. Rick, let's see what you think.
Yeah, and I agree with Don's point as well, because once again, if you were to cover up the name, you might not think this was a big, slow-moving consumer staple type name here. But we have seen 46% of a rally off of those 52-week lows, and that's after we had this 19% drop or so off the highs. So we had some big moves in this name. And this chart is really interesting to me because if you look back, if you follow our dashed green line back here, you can see that we're getting very close to filling this earnings gap that we formed during November near 84.85. So a noteworthy area to keep an eye on as today's session progresses. We're not very far away from that point here as we speak. That also matches up with the lower level of our downward sloping channel type shape here between our two white dashed lines. RSI moving into the oversold territory, typically regarded as a sign of potential weakness here. So I'd be really curious if we break through that gap level and the RSI solidifies into that oversold area. Could be a noteworthy scenario. Notice that our purple 252-day exponential moving average comes in at about 80.50 or so. So that's a noteworthy area to the downside. To the upside, we have our two moving averages, yellow 21-day and orange 63-day, basically right on top of each other, near about 94.55. So quite close to Don's break-even point to the upside on his trade. If we were to look at our volume profile, we can see that it also matches up with the volume node. So that seems like an important area to clear based on these technicals. Notice as well that our purple 252-day EMA also lines up with the volume node. So 80.50 supportive area to the downside.
Great to see you, Rick. Ducat, thank you for all those charts today on the big three. And we'll give you the final word, Don Kaufman.
Yeah, markets right here, right now, again, expect considerably more volatility. Sure, we're going to find a bottom through this, but as I said earlier, look for higher degrees of correlation. For those of you that are on Thinkorswim, look at like the S&P 100, the number of stocks that are trading, if you will, to the downside in some of these big sell-offs. You want to see in the S&P 100 that number hit like 90, even 95. We have to start to correlate to find a bottom in this marketplace.
All right. Nice to see you both. Thank you so much for the big three today. Always exciting. And today we had Tesla, EWG, the German ETF, and Walmart. Don Kaufman, Trade, Rick Ducat. Thank you both for the big three.